Good morning. This is Business Morning on Channels Television. Thank you for joining us. I'm Chimeze Obi Iwagu. Well, the Central Bank of Nigeria recently banned importers of maize from accessing forex from the Apex Bank. This implies importers would now have to rely on supply from the parallel market to carry out their transactions. According to the CBN, the ban was necessitated in order to protect local production of maize, stimulate rapid economic recovery, safeguard rural livelihoods, and increase job creation. However, this move has not gone down well for some subsectors in the agricultural sector, and one of those is the poultry subsector. I'm being joined now by the chairperson, Poultry Association of Nigeria, Ogun State, Blessing Alawode, and of course, I also have an agri consultant and the CEO, X-Ray Farms Consulting, Mr. African Farmer Mortgagee. Thank you very much, Mr. African Farmer, for joining us on the show. And of course, thank you, Blessing, for joining us on the show. All right, Ms. Alawode, let me start from you. What concerns do the poultry farmers have, about the CBN's policy?
Thank you very much. Good morning, viewers. Our concerns regarding the recent ban on the importation of maize is the fact that currently the local production is inadequate to meet the local demand. The poultry industry thrives on the poultry feed. For every ration of poultry feed, we have a 50 to 60% maize inclusion. For instance, in Ogun State, we have a poultry population of 15 million. This comes to a daily requirement of maize of 1,068 tons. If we multiply this by 365, you know what it comes to. In January, the price of maize was 85,000 naira. In March, it was 95. As we speak today, maize is at 170,000 naira per metric ton and very unavailable. So with the current ban, I fear that the poultry industry faces the danger of a collapse, given the fact that maize as of today do not have a close substitute of commercial quantity. So for the energy requirement of a poultry ration, we depend mostly on maize. And because of the recent crisis we have in the Northwest, Northeast, I suppose, the capacity of our local producers is insufficient. With this rapid increase in price, over a period of 3 months, we have seen the price of maize moving from 90,000 to 170,000. This represents about 78% increase in our cost of production. That excludes other challenges that we have posed by the current state, the current global state because of the COVID pandemic. So how does an industry like this that employs millions of Nigerians, how do they cope? Maize hasn't got a very close substitute that I know of. The production we have locally cannot sustain us. So what do we do?
All right, Ms. Alawode, just hold your thoughts there. Mr. African Farmer, you are an agri consultant. What do you make of this? Poultry farmers are saying, this is not good for us. The maize farmers are saying, hey, we love this.
Okay, so I'm not just a consultant, I'm a practitioner, and I've been growing maize for about 20 years commercially, and I've done that across the country. And so I have a practical perspective. For the poultry farmers, this ban is likely to kill them. And I'm not missing the words kill them. And why do I say so? And last year, it rained heavily in October, destroyed a lot of crops, and there was a ban or there was a closure of borders. So that affected, that helped the poultry sector, in quote, but also labor reduced. However, COVID and the lockdown practically paralyzed the poultry sector because people, the way it's designed is they stay on their farm, they produce, marketers come. So when there was no movement, they were killing the birds, they were perishing crates. Some company sold a crate of egg for 50 naira because they did not want to perish it themselves. So I know people who were rearing pigs who bought 500 crates at 50 naira in Ogun State and went to use to feed the pigs. Now, so temporarily, the maize farmers are celebrating, but I don't see light at the end of the tunnel. I should be celebrating too. Why? The cost of production, the chemicals, the other inputs have gone higher. And two, when we check data, if you check FAO, that's United Nations, they have a study they did between 2005 and 2008, where government also banned the importation of maize.
Absolutely, because I know that this maize, whatever, there has been a ban. Yeah. So just wondering why CBN has to, bring up this policy even when there has been ban. So what has been happening all this while?
So what's been happening is that there's an official ban, and they give waivers. So what happened was that FAO, that's Food and Agriculture Organization, did a research and found out that it did not increase production. In fact, farmers stopped producing. And so if that data is available, and again we are banning, and don't forget again that most of the seeds...
No, but why wouldn't they produce? We have quite an expensive arable of land.
You see, every time from knowledge, from experience, and from data, every time government decides to say, oh, go into XYZ production, the real farmers move back because you private sector professionals will rush into the opportunity, crash the system, and the farmers don't produce. So when they lose the money once, they stop. So let me put some analysis around this. So currently, the two major maize seed varieties that would deliver the intended result of CBN is imported into this country. It's not produced. It's produced in Brazil, Argentina, and in the US. So when you say you place a ban, they can give you like 8 to 10 tons per hectare. The current seeds we have, most of it, except for the exception of one company, would give you about 3 tons. So when you're placing a ban and there's no alternative with seeds, CBN did not prepare the seed companies to even produce enough seeds. Earlier in the year, the two major Nigerian seed companies were still appealing to people to come and buy. So they did not prepare for the inflow of people who will need the seeds. So there's a ban. We don't have enough seeds. So what is happening is the grains, that's what is planted and harvested, is what they're going to repackage again for people to plant. So when you plant that, you can't get the results. So the intended result you can't get. According to USDA, that's U.S. Department of Agriculture, they projected that Nigeria would need an extra 100,000 metric tons as against the 400,000 last year because of the rains that destroyed the farms last year. So now there's a prediction of extra 100,000, and you are now banning, and we don't have fertilizers. Even when you plant corn and there's no fertilizer.
Well, Dangote fertilizer will soon come too.
In February. The maize...
Not in February, actually. It's going to be earlier than that. In fact, they are talking about September, as early as September.
No farmer in this country, Nigeria, I put my 24 years experience behind that. No farmer plants maize to dry in September again. They've missed the season. Currently, farmers in Kaduna are crying looking for fertilizers and across the country. So we don't have fertilizers, you ban maize. Maize uses high nitrogen. So even if you buy the right seeds, you don't have the right fertilizers, you won't get the result. So most times, they beautiful initiative, good intentions. I say it's feel-good intentions. So now you've banned, there's no fertilizers. COVID did not allow most of the importers of the agri inputs to import. So we have shortage of agric inputs, we have shortage of fertilizer, and you said ban.
So good initiative, but wrong timing.
Wrong timing.
Good. All right, Ms. Alowode, what are the specific implications of this for poultry farmers or poultry business? Is it possible that we will not see eggs to eat?
I pray it will not get to that. However, like I said earlier, for poultry production, there should not be a stop. And our basic inputs for energy is maize. I repeat again, there is no close substitute at commercial quantity. So if you can have feed for your birds, the only option you have will be to downsize or close down. So I fear that a lot of poultry farms, especially the small and medium scale, will be closing down. Currently, feed layers mash goes for 3,675 to 3,800, depending on where you are buying from. When we are talking about poultry, that also includes your chicken. Some time ago, the government had earlier banned the importation of frozen chicken. And now, what we need to produce to up the local production is being banned. Poultry, the feed for the broiler ration is almost at 4,000 now. With the cost of production, I have a slide I have also forwarded to you. I don't know if you mind projecting it. The price of finished feed currently is on 3,675, like I was saying. A price of egg is, farm gate price is still at 900. The product egg and chicken is a bit inelastic in demand, and so it's not something we are able to transfer, as it were, all of the increase in our cost to it. Otherwise, it will become very unaffordable. So I fear a situation whereby the drive by the government to encourage local production of through the anchor borrower program that they run on broiler, I fear that it may suffer a collapse. I fear that many Nigerians who have labored to put all their life investment into poultry may be hitting a very crisis point. Like the second guest said, I fear a death. I fear death of the poultry sector because we cannot survive, the chicken cannot survive without feed, and there is no feed without maize.
All right, Mrs. Alowode, you are the chairperson of Poultry Associations of Nigeria, well, Ogun State chapter, but have your group tried to have a conversation with the central bank and other stakeholders involved?
Well, during the lockdown, the sector faced a lot of crisis because we could not sell our products. Maize sold as low as 600 naira per crate. Nigerians can testify to that. We see farmers hawking maize, hawking egg in every corner of the street, every market, some buried. These are very open secrets. At about this time, we started having increase in the input costs, including maize. And so we cried out to both the federal government and the state government. We cried out to the federal government to assist by supporting the poultry industry by releasing grains from the grain reserve. I'm not sure this was heeded. In the press conference organized by Poultry Association of Nigeria, Ogun State, precisely in May, we called for an importation window. Just like you alluded earlier, maize was originally banned. So we pleaded for a structured importation window to enable us have enough maize to sustain us for this season. We were surprised that the response to that was an outright ban, even for those who had managed to secure or to start a process of importation. So I think that this is an action that is very, very ill-timed. Currently, there is no maize in Nigeria. And even if you plant today, excuse me, ma, even if they plant today, we don't plant maize today, harvest today, and get it for use the next day. It will take at least quite some time to achieve that. What happens between now and that time?
Okay, I'm sure we'll get the central bank to actually react to this, because this seemed to be a very serious one. Now, Mr. African Farmer, for you, what should be the solution?
Well, CBN needs to reverse the ban if they don't want to kill, and I use that word strongly, the poultry and the livestock sector. And they need to now invest heavily in the seed companies so that we can have that. And two, to be able to do that and not discourage the youths. Many youths, many parents have funded them to go into livestock, and this is really going to hurt them. So we need the government now to reduce all these incentives of giving inputs to farmers and start processing. When we begin to add more value to corn, we'll find naturally have more people into production. So government needs to, the same way they reversed 3 hours going to the airport, they need to reverse this and open a window to allow maize to come in and fund the value chain. If not, there's a clear and present danger. The maize we are using in 2020, dry, was produced in 2019. The one they are encouraging production now will be used in 2021. What will happen to the livestock sector and even the maize producers celebrating now? The costs will go higher, and even the multinationals that use the cereals, many of them will now be contending with the animal feed. So they need to reverse it and go back to the drawing board, call the experts together in the private sector, because government cannot do most of these things without the private sector's contribution. But they mean well, but we need to see that they are open to suggestions by reversing this.
I'm sure the central bank is listening, and they will have to clarify some of these issues and perhaps get this issue resolved as soon as possible. Thank you very much, Mrs. Blessing Alaude, the chairperson, Poultry Association of Nigeria, Ogun State, and of course, Mr. African Farmer Morgaji, the CEO, X-Ray Farms Consulting. We'll take a break, and when we come back, of course, we'll look at the commodities market space. Do stay with us. All right, let's begin this segment from the oil market as prices were steady this morning, erasing gains earlier in the session as rising coronavirus cases dampened the outlook for demand and countered optimism over more U.S. stimulus. Efforts to stimulate the U.S. economy's recovery from the coronavirus crisis had raised hopes for stronger oil demand. Brent crude futures climbed 2 cents to $43.43 a barrel, while U.S. West Texas Intermediate crude futures fell 7 cents to $41.53 a barrel. Both benchmarks rose as much as 0.5% earlier in the session. A weakening of the dollar typically helps improve demand, as that makes crude cheaper for global buyers. Further aiding the stimulus, the U.S. Federal Reserve's policy setting panel meets today and Wednesday, where it is expected to reiterate it will keep interest rates near zero for years to come. Traders will be watching out for U.S. inventory data due from the American Petroleum Institute Industry Group later today, and of course the government on Wednesday. Refined product stockpiles are expected to have declined last week, while crude oil stockpiles are expected to have held steady. Okay, and for domestic commodities market, I'm being joined by Desola Sumoni, one of the research analysts with Financial Derivatives Company. Hello, Desola. Good to see you. Good morning.
Hi, Chimeze. Good morning. Good to see you too.
All right, let's begin from the oil space. U.S.-China trade tension continues to heighten. What does that portend for the oil market?
Like you know, the U.S. and China have a long history of escalating tensions, starting from the trade tensions, the trade conflicts or the trade wars in 2018 the blame was in at the end of 2019 and at the beginning of 2020, essentially at the onset of the coronavirus pandemic. The U.S. accused China of that the coronavirus pandemic started in a laboratory in China, and that China was lying about it, and then also China accusing the U.S. And then with this security law that was enacted in Hong Kong, again, the U.S. criticized China. And finally, most recently, the closure of the U.S. consulates in China, in Chengdu, China, and the closure of the Chinese consulate in Houston, Texas. All these factors, this history of escalating tensions usually comes with uncertainty and negative sentiment, which generally batters global financial markets and global oil markets and leads to a flight towards safe haven assets, as you have seen. So again, like you said earlier this week, we saw the US dollar weaken to a 2-year low against a basket of other currencies. And generally, when the US dollar weakens against a basket of other currencies, the commodities denominated in US dollars are generally cheaper for all these for holders of these foreign currencies to buy. But we saw that caps were gained. Caps price increases in oil price in crude oil. But caps were gained because of, again, like I said, the US-China tensions and also rising coronavirus cases in some states in the United States and in Spain. So generally, to sum up, the tensions between US and China generally batters oil prices.
Where the oil market is going, do you think OPEC may have exhausted its capacity to control prices?
Well, I think that the reason why oil prices have not declined lower than they are is mainly because of the OPEC plus production cuts. Generally, you know that there are two sides of the market. You have the demand side and the supply side, and these two sides interact to determine the price, at least in a competitive market. Right now, what OPEC is doing is try to shift the supply curve downwards to reduce the supply, to drain the market of the glut. And currently, the OPEC Plus is has cut production by about 10 million barrels per day. But the challenge is the demand side. Now, because of this coronavirus pandemic, the demand side took a serious beating. Recovery is actually slow. For one reason is the resurgence of coronavirus cases in some key cities in the US and China and in Spain. But also the fact we are seeing also flattening in the growth of commercial flights. So we are seeing from when the country said easing lockdown, we saw an increase in commercial flight growth rates. But that growth rate has flattened now over the past couple of weeks, which again signals that the recovery in oil demand might be slower. Finally, we are seeing big tech companies like Google say they are going to encourage their workers, over 200,000 workers, to work from home up until at least July 2021. And it's likely that other tech giants and generally other huge organizations are going to ask their workers to continue working from home for the foreseeable future. So this again shows that the demand in oil, the recovery in oil demand will be slower than expected.
Now, the coronavirus pandemic, as well as U.S.-China tensions, have continued to weigh on investor sentiment on safe haven assets, pushing gold to an all-time high. Some analysts say that the primary drivers of the gold price are its negative correlation to real interest rates and the dollar. How would you explain this?
Like you rightly said, Chimeze, there is a negative correlation between real interest rates and gold prices. For instance, when, like we are experiencing now, when we have low real interest rates, we see that investors, we see that long-term government securities such as bonds become very, very poor store of value for money. So we see investors typically move from long-term investment towards safe haven assets such as gold. And that relationship also holds vice versa. Also, we see that because of the gold is denominated in US dollars, when the US dollar weakens against a basket of other currencies. And we are seeing that the US dollar has weakened to a 2-year low against a basket of other currencies. Holders of these other currencies find it cheaper to buy gold, and that's also driving the demand for gold. In addition to all of this, we are seeing this uncertainty about the recovery in the global economy, as well as this uncertainty or negative sentiment brought about by the US-China trade tensions, also driving a demand for gold, and that's why we are seeing the gold prices increase quite sharply.
All right, let's look back home here now. Despite having huge gold deposits, Nigeria earns next to nothing from gold exports and refines very little in the domestic economy. As a matter of fact, the president recently decried the loss of about $3 billion revenue to illegal miners. How can the country effectively harness the export potential of gold?
Well, I think with this twin pandemic of the coronavirus, with this twin shock rather of the coronavirus pandemic and oil price shock, I think it's causing some form of introspection. You know, I think the government is now paying a little more attention towards diversifying Nigeria's export base and revenue base. For gold, it is said that Nigeria has huge gold deposits, although there's no official figure. Most of what we have are guesses and estimates. But let us, for the sake of this conversation, assume that Nigeria has huge gold deposits. What happens currently is that the mining in Nigeria is dominated by artisanal farmers. I mean, some analysts put it at 500,000 artisanal miners dominating the gold space. And because these guys are not licensed, they do not pay any royalties, they do not generate any revenue for the government. And that is why, like you rightly said, the president recently declared that from 2012 to 2018, the country has missed, essentially not lost, but missed about $3 billion in potential revenue from gold. But I would like to say that there's been some positive steps, at least let me call them baby steps, towards harnessing the potentials of gold in Nigeria and to increase government revenue and generate employment and things like that. So first of all, last year I think the president inaugurated an initiative called the Presidential Artisanal Gold Mining Development Initiative, which essentially the goal was to integrate these artisanal farmers, to formalize these artisanal miners, and to integrate them into the legal and economic space, so that they can begin to they can begin to generate revenue to the government. The government also established designated gold selling centers so that the artisanal miners can sell their gold to these designated centers, and then this gold can be sold to the central bank. I mean, recently, I think last week, this initiative mined what they call first locally mined gold in Nigeria, about 12.5 kilograms of gold, and sold it to the central bank, which form parts of the reserves. So we are seeing those baby steps that have been made. Also, the Ministry of Mines and Steel, I think they've granted license to two mining companies. We have the Kian Smith Trade and Co. in Moe, part of Ogun State. We also have these Canadian-based soil explorations with the Seglola project in Osun State. So we see that the government is taking some steps, baby steps, but again, baby steps are better than taking no steps at all. So we are seeing the government take baby steps to begin to exploit the gold potential of Nigeria. And it's quite important because, I mean, our neighbors, we see Ghana, we see Senegal, Burkina Faso, Ivory Coast being huge exporters of gold. I mean, as of 2018, the West Africa bloc together produced about 350 tons of gold, and Nigeria contributed only about 5 tons of it or 14 tons of it.
Okay, Desola, another burning issues there is Nigeria exporting about $81.48 billion of electricity to Niger, Togo, and Benin between 2018 and 2019. But isn't this an irony? Yet Nigeria is grappling with epileptic power supply.
I understand that it's tempting to think that it doesn't make sense, to export power when the country itself is not generating enough power for its domestic consumption. But I think that it's not a bad thing to export power. As a matter of fact, exporting power, what they call regional integration, is the characteristics of good electricity system. But let me give you some context. Nigeria's power demand is estimated at anywhere around 40,000 megawatts, and we have an installed capacity of about 12,000 megawatts. Now, on any given day, Nigeria produces about 4,000 megawatts. So, because we have a lot of idle capacity that cannot be used. So we produce only about 4,000 megawatts, and the amount we export is only about 300 megawatts. So it is small, and it's not even the reason why you don't have light in your house. Now let me tell you why. So from we have 6 to 7 generating companies called Gencos. We have the Kanji Dam, Shiro Power Plants. We have the Afam Power Plant. All of these plants generate power, right? And then they sell it to Nigerian Bulk Electricity Trading Company, which buys it from the Transmission Company of Nigeria. And then from there, they sell this to the discos. We have the Eco Electricity Distribution Company. We have the Ibadan Electricity Distribution Company, and the like. And then from the discos, it comes to you. Now, that is how it's supposed to work in an ideal world. But there's a lot of for many reasons, that value chain is in tatters, and those are the reasons why you do not have electricity. For instance, the discos, they reject power for many reasons. One, because of consumer apathy. Actually, a lot of consumers refuse to pay for their electricity. We have also the tariff system is not cost reflective, so it is not profitable for the discos, and many other reasons. So because of these other reasons, and also the discos do not know their clients, they do not know their customers, and that's why we have a lot of what's it called, estimated billing. So because of all these factors.
Yeah, Desola, we really don't have much time. Let's go to the domestic commodity price movement. Can you quickly take us through that price movement and the major drivers?
Essentially, right now we are seeing increase in food prices. Generally, we are seeing increase in food prices. We are seeing price of palm oil, yam, garri, flour, beans, tomatoes. We are seeing all of those increase. And the major driver is one, the planting season. Two is the pass-through effect of the exchange rate. And on areas like the Lagos Island part of Nigeria, of Lagos, because of the planned closure of the third mainland bridge, we expect that in those areas, logistic costs to transport commodities to those parts of Lagos would increase, and we expect a pass-through effect to that. We expect a pass-through effect on prices. Also, we expect higher demand coming from the Eid celebrations, the upcoming Eid celebrations, to also push demand, to also push prices higher in the near term.
Very much for your time. Desola Sumoni, one of the research analysts with Financial Derivatives Company. Thank you for your time. And for review of Monday's trading activities at the equities market, here is Eddie Young Ewan. Eddie, a good start for the week, but let's hope it will be sustained.
Good morning, Jimmy. Yes, you're right. But, it is said that when Dangote Cement sneezes, the market feels it. Well, that's what happened yesterday. But it wasn't only the industrial goods giant. There was Lafarge Africa, which released impressive earnings, showing a 180% increase in profit after tax. So, of course, that was welcome news for investors. There were also gains from some Tier 1 banking stocks, which spurred markets performance. The all-share index rose 1.46% to 24,783.61 points, and the equity cap jumped by 185 billion naira to 12.928 trillion naira. Now, looking at the activity chart, volume and value started off impressive, and that was largely due to flour mills, Lafarge, and FBN Holdings. There were 169.99 million shares worth 2.38 billion naira traded in over 4,300 deals. Sectoral performance was mostly negative. The banking index gained 3.71% as 9 listed lenders posted gains, while industrial goods was up 3.34%. Of course, that was due to Dangote Cement and Lafarge. On the flip side, consumer goods, insurance, and oil and gas was down. For the oil and gas counter, that was due to declines on Owando and Seplat. But let's talk to Muhammad Kayode, the head of securities dealing at APT Securities and Funds. Good morning, Mr. Kayode. Thank you for joining us on the program.
Good morning. Thank you. It's a pleasure to be here with you.
Once again, Dangote Cement was one of the market's drivers. Is this still the share buyback program that's attracting investors, or is there something else?
Hello?
Hello, Mr. Kayode. I'm saying that Dangote Cement was one of the market drivers yesterday. So is it still the share buyback program that's attracting investors, or is there something else that's attracting investors to the stock?
Yes, actually, what happened yesterday was as a result of what the company has promised the investor that they are going to do a share buyback. So a share buyback, by the implication, what it means is that more shares will be acquired and will be cancelled. So in this process, there will be more room for demand in that particular stock. So when the buyback starts to happen, then there will be pressure on the demand side. So that is what actually reflected in the price of the stock yesterday.
Let's talk about earnings now. Julius Berger released its unaudited Q2 earnings yesterday, showing a drop in revenue. Could you tell us more about the numbers?
What happened in which company? Hello? Hello? Hello?
Hello, Mr. Jamiu, can you hear me?
Hello?
So I think we
I can hear you. I can hear you.
Okay. So I was asking about Julius Berger's results. Could you tell us more about the earnings?
Yes, as you have observed that there is drop in the revenue of the company. It's expected, as we have known, that in the period of March and April, in the period of March and June, which comes the second quarter, we expect that the revenue is going to be affected because of the issue of COVID-19. You can see that most of their contracts, most of their contracts that government giving to them are put on hold. So all these things will surely culminate in what happened in the result of the second quarter. So it's expected that they will have drop in the revenue.
Okay, thank you, Mr. Kayode, for your input on the program. Mohammed Kayode is the head of securities dealing at APT Securities and Funds. We'll stop there for now. Over to you, Chimi.
Thank you, Eddie. We'll take a break, and when we come back, we'll do an opening call to London. And of course, we'll get back to you for the debt and currency market. All right, let's get updates from the streets of London with Juliana Olainka. Good morning, Juliana. Well, let's start from the corporate world. Amazon is stepping up its competition with British supermarkets by pressing ahead with the wider UK rollout of its online grocery service. That's by the end of the year. This must be a welcome development for Londoners, right?
Well, it is a welcome development. I would say it's probably more of a welcome development for Amazon, who seem to be taking over the market share of online shopping in the UK. 3 out of every £10 spent is spent online. It was £2 before COVID, but of course this has increased. So from today, actually, Amazon Fresh kicks off, and they'll be delivering same-day deliveries for Amazon Prime members to about 300 postcodes across London. There are plans, of course, to extend it further if it does take off, which it's likely to, because, as I said, Amazon really have the lion's share of the online market. Their country manager, Russell Jones, was speaking about today's launch, and he said that sales on Amazon Fresh have been particularly strong following the lockdown, but stressed that the latest move had been in the pipeline before COVID. So I think we actually discussed it last year that Amazon were planning on doing this. They said Prime members love the convenience of grocery delivery at home, which is why we've made Amazon Fresh a free benefit of Prime. Grocery delivery is one of the fastest growing businesses at Amazon, and we think that this will be one of the most loved Prime benefits in the UK. So if you subscribe already, if you're somebody that gets Amazon deliveries delivered either on the same day or next day delivery, this Amazon Fresh will be free to you. I believe they have foods from Pepsi, Whole Foods, Danone and others, and it's likely that more and more smaller retailers will sign up, because we know just how much much Amazon have been extending their reach in the past couple of months.
Another corporate news there, AstraZeneca has agreed a deal worth as much as £4.7 billion with a Japanese drug company to develop and market a potential new cancer treatment. What will this deal mean for the company and, of course, the British government?
Nothing for the British government because they're not involved in this. This is a private partnership between Amazon and I believe Daiichi, which is a Japanese pharmaceutical firm. They've actually been in business before. I believe last year there was a £6 billion deal done for another cancer treatment, and they're happy with that, so they're going forward with this. AstraZeneca, they are Anglo-Swedish. They've paid, I believe, £800 million up front to this Japanese firm to develop and market a cancer treatment, which I believe helps with tumours in the lungs and within breast cancer. They said that they want to pioneer this treatment across the world, and they'll be sharing some of the profits and the developments with Daiichi outside of Japan. Within Japan, they will have all of their rights. Great news for AstraZeneca, of course. Over the past couple of weeks, they really stormed right up the FTSE 100. I believe at the moment they're one of, if not the first, the second most profitable company on the FTSE 100 at the moment. And most importantly, for COVID, they are one of the leading firms working with Oxford University into finding a vaccine. So it's not just COVID, cancer as well. They want to be one of the world leading drug manufacturers on that.
And what other corporate news is a headline grabber this Tuesday morning?
Well, the FTSE opened in positive territory this morning, up by about 65 points. Sorry about that, Chimmy. I'm getting a little bit of feedback in my ear. One of the big breaking stories just before I came into the studio actually was about Selfridges, which is that massive department store on Oxford Circus. They've just announced that they'll be letting go 450 staff. Not great news. This comes off the back of Marks and Spencer's last week saying that they'll be cutting 950 jobs, and there are estimates that about 250,000 jobs will be going on the British high street. So that's not great. But the FTSE was in positive territory, and that appears to be because there are signs that perhaps the government may be extending the Help to Buy scheme. The Help to Buy scheme is where the government does put in a little bit of percentage in buying a property for first-time buyers. It was supposed to be scrapped soon, but of course we know COVID has disrupted everything. So there are whispers coming out of Whitehall that perhaps that could be extended. So we did see a lot of the house builders' shares rise this morning. Leading that was Barratt Developments, up by 2.8%, closely followed by the Berkeley Group and Persimmon. Royal Dutch Shell and BP, they're also up, those oil majors. That's because there are rumours on the grapevine that Donald Trump is going to start a fresh stimulus for Americans because, of course, they're struggling to battle COVID and many people aren't going to work. That's it for this morning, Chimmy.
I thank you, and I'm sure we will get more updates from you later today.
Thank you.
And back here on the debt and currency market. Eddie, back to you.
Thanks, Chimmy. The bond market began the week on a positive note with minimal volume seen. Pockets of demand were seen across the board, particularly on long-tenor maturities. Yields declined by 15 basis points. On that counter, we had 51 deals worth 33.22 billion naira. The Treasury bills market was flat yesterday. As you can see, there were no deals on that counter. Investors are most likely paying attention to the primary market auction tomorrow, where the CBN is expected to roll out Nigerian Treasury bills maturities worth 265.95 billion naira. On the other hand, in the OMO market, average yield contracted by 16 basis points to 4.6%. Buying interest was seen across the board, across the mid and long-term maturities, with average yields declining there on the short-term maturities. There were 19 deals worth 37 billion naira on that counter. Let's talk to Ramat Baba, the chief dealer for fixed income at FBN Quest Merchant Bank. Good morning, Ramat. Thank you for joining us on the show.
Good morning.
Activity in the Nigerian Treasury bills market has been relatively weak lately. When are we likely to see some activity pick up in that space?
Okay, so the general belief is that the yields on treasury bills are currently rock bottom. So I think a few investors are staying away for a bit. And then also coupled with the fact that there's been continuous debit of CRR by the CBN, even though that seems to have slowed down in the last 2 weeks. At the moment, the system is quite liquid, over 500 billion liquid. So the expectation is if liquidity continues to stay in the market, we might see a bit of demand coming in again into the market for OMO bills and possibly a bit of NT bills.
Do you think the bullish sentiment we've been seeing in the bond market will continue this week?
Yes, we think the bullish sentiment might continue for a while. Even though we've seen profit taking in the last 2 days, this week we've seen a bit of profit taking. We've seen people selling off to take profit on their investment. But then at the same time, yes, demand continues to exist, though not as much as it was 2 weeks ago and about that period. Yes, things are actually slowing down, but we think the bullish sentiment will continue with the volume of liquidity in the space, and also coupled with the fact that there are really no other alternative investment outlets.
Thank you, Ramat, for your input on the program. Ramat Baba is the Chief Dealer for Fixed Income at FBN Quest Merchant Bank. Well, that is on the market review. Over to you, Bichimi.
Thank you, Eddie, and we'll pray for a profitable day today. And that's it on the program. Thank you for watching. I'm Chimeze Obi Iwagu.